Hello, financial investors. My name is Brent, and today we're going to go ahead and go into the M1 Finance Roth IRA, and we're going to be taking a look at possibly taking profits on some companies trading near 52-week highs that have gained 10, 20, 30, 40% gains within the M1 Finance portfolio, either in the last few months or over the last year and a half period that I have been on the M1 Finance platform. I don't have anything scripted. I have brought up a bunch of windows as far as the information that I want to cover, and I want to go over that information with you. That way, if you are also in the same position where you're looking at your portfolio, you have positions that are sitting at some 52-week highs or all-time highs, and you may be considering taking profits. Maybe you'll go through the same mindset as I, going through your portfolio and looking at your statistics. Where is the resistance point? Where has been your support? And what could possibly go on in the future in this current market. So with all that said, if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I cover the stock market, dividends, and real estate. If you're interested in any of those topics, definitely hit that subscribe. If you do enjoy this video, find it helpful, hit the thumbs up. And if you have any comments, questions, or would like to let me know what stocks you have traded at 52-week highs that you are considering taking profits on or that you might sell here in the short term, let me know by dropping a comment down in the area. I always read and reply to all your comments, and let's go ahead and get into the video. So currently, the portfolio is sitting at some very all-time highs. I haven't broke 16,000 yet in the past. We have trended here breaking to 15,888 just back on July 15th. Now, currently, we're at 15,888.57. So today, we had a fairly good day. On Tuesday, July 23rd, we were up around 1.02%. The rest of the market was up about 0.75%. So right now, looking at my portfolio, is the time, is this the time right now to begin taking profits on multiple companies? Now, sorting this here by my winners all the way down to my losers, I have a few positions here that are up nearly 60%, 55%, 42%, and these are all money weighted. So what you see here is not actual the equity return, but it's the equity and the dividends that have been paid out from these companies back into the portfolio. So ABM is not actually up 58.11%. It is actually up around 40.87. But in the last few months that I've owned this company, has paid out dividends that has made that return seem much higher as far as money weighted. Now, the companies here that I want to cover are Cisco, ABM, WP Carey, Apple, Kimberly-Clark, Walmart, and Lockheed Martin. Now, these are all solid companies. Any investor out there who looks at these names probably knows every single one. Maybe you'll miss one or two, but for the most part, you'll know what these companies do, what their mode is, what they're strong, and what their products or services are. But these companies are trading at some all-time highs. Cisco, as far as equity, it is up 32.3%. ABM 40.87. We have WPC about 24.2. We have Apple up 16.9, Kimberly-Clark up 16.6, and Lockheed Martin down here at 11.88. Now, what I wanted to show you here is looking here at the 1-year period on these charts, just how much resistance that these companies have had over the past year and why I am considering taking profits on a few, taking the equity that I have made, only the equity that I have made in the position. I won't actually be selling any of my initial equity that I invested. So for example, I invested at ABM, I put in $296.77. It is now worth $450 essentially in today's market. That has made me a return of about $152.42. So here I would take the gains of 152 and sell out of $152 worth, if that's an example, and move that equity into another position. Cisco, I would take profits anywhere from $100 to $200. WP Carey, I take some profits there, anywhere from $100 and so on. So that is what I mean by taking profits. I won't actually dig into how much equity I invested into these companies, just taking the profits and moving it elsewhere. So Cisco here, looking here, we can see we had a huge run up out of December, hitting some all-time highs here in early April. Now, looking at this volatility here, we can see that Cisco has been here before at this $57, $58 point. But guess what has happened? Every time it hits here, market takes it down, it climbs back up, market takes it down, it climbs back up. It didn't fall quite, as low. It actually only bottomed out about half of its normal falling. It did the whole two double bottoms here and then trended sideways now. So it's doing another bottom here, double bottom. Now it could trend higher. And looking at earnings, it actually did pass back on May 15th. I was reading through this report over here on Earnings Whisper about Cisco. They actually met their expectations. They were expecting to come in at 79 cents per share, expected 77 cents per share and 12.9 billion. They had 79 cents per share and 13 billion, so they beat expectations. I'm not sure why this says misses. Actually, down here towards the bottom, they came in with reported earnings right on the dot. Consensus 77 cents for over, and they beat it by 79 cents. Their revenue growth was 4%. The reported revenue was up 0.4%. So very nice growth there with Cisco. But even when they beat this back on May 15th, that did not help this company out. Back here in early May, that helped them propel forward, and they may be earnings here upcoming, but they could also miss it. They could project lower. Going into this sort of a market right now, we really don't know. And already we can see that the market, it's already been pricing in a rate reduction in the future, but that really hasn't helped Cisco out in the future. Also, there was big talks on Tuesday of the US and China meeting again to discuss trade talks. That hasn't helped this company either. So this company, looking at it over a 10-year period, has had enormous growth over the last few years. You can see as of midpoint 2017, this company went from a $32 company, now almost $60. I had owned Cisco back in 2017. I bought it around $32, $33 over on Robinhood, over on Merrill Edge, and I sold out of my position in early 2018. But look at this growth just within the last few months, the last 7 months. So can it chug higher from this point? It hasn't. If we look back at the 2000 recession here, the tech bubble here, this was, every tech company out there had experienced this huge blast off, and then they came back down to normal valuation. So could this be what is taking place here with Cisco in today's day? And to me, I think this could be a good indicator for me to just take a little bit of profits. I don't know if the company will go higher. If it does, that's completely fine. I will have some equity still involved in this company, and it'll continue making equity gains on that invested capital, but I will be rolling my gains into other companies that are potentially, they are actually down in lower equity or down in the negative in my portfolio, lowering my unit costs, increasing my total portfolio yield on costs, and maybe even getting a higher yield on cost than what Cisco is currently offering me. So that was a bit there for Cisco. Let's go ahead and cover ABM. I'll go over this one a little bit faster. ABM actually has quite a bit of growth. We can see here that this one is basically in a growth mode. It has not had any sort of resistance points. It has basically chugged higher as of December. I believe I had bought it back in a November period, and as of that point, it bottomed out around December. That was the only opportunity that I really had to buy this company, and I really haven't bought it since since it popped up in January going into 2019. I really haven't added it anymore, and this is just chugging along higher and higher. Now ABM, they beat their estimates back here on June 5th, 2019. They came in with earnings surprise of 11.9. They did miss their revenue slightly by 1%, but they had shown revenue growth of almost 1%. So really, they missed their revenue report by just a slight estimate, but their earnings were growing, and that's the important thing, to see earnings grow and revenue growth year over year. So ABM, while it is trading at 52-week highs, I still see this company as a moving company higher in the short term. Even into the long term, this company could trend higher. It hasn't had any resistance points where it hits a resistance, falls. It doesn't do a double bottom where it's just having a really hard time pushing past the point. So ABM is not one of those companies that I would consider taking profits on at this time. Now, the third one here, WP Carey, we can see here that recently it has had a little bit of resistance. So I'm going to go ahead and move this chart down to the 6 months here. We can see here just recently, back in June some time frame, that this company, actually I have another chart right here, not a chart, but this graph. Now we can see here that WP Carey back in June 19th and 20, it was hitting some highs here of around $85, $86. It came down all the way down to $80 and then was picked back up. Now it's back at this $84, $89 point. It's also trending sideways here. Looking at their earnings here, they kind of reaffirmed where they were heading. They had some really good growth. They had some really good revenue, and they actually beat their expectations as far as reported revenue. They had estimates of 289 million. They came out at 298. Strong beat on revenue growth. They also had a consensus of 120. They beat it at 121, and they had nearly a 50% revenue growth. So this company just continued chugging along higher and higher. So they actually went and did earnings on May 3rd. They should be doing earnings once again here in just a few weeks. And while this company is trading at near all-time highs, with the potential growth here that this company sees in the future, I think that this little volatility here was because the Fed, the rates were climbing, and the market didn't know at this time that we were going to be pricing in a rate cut. People were saying that we may be having a rate cut month after month after month, but it never happened. Now, recently, the Fed has came out saying, hey, look, July, August, we're seeing a little bit of weakness in the economy. We are considering a rate cut. And then somebody else came out and said, hey, how about we go really drastic and we do a cut of 0.5%? The Fed came out, no, we're not going to do a 0.5. At the most, we'll do a 0.25, maybe once, maybe twice into the future. And that is getting, it's getting sort of projected higher as far as estimates of percentage of the percent of that may happen. So WP Carey, if there is a rate cut in the future, this sort of resistance that it's been having at this point, this volatility here that they had, what took them down with these rate cuts and uncertainty, if the Fed comes out, cuts rates, WP Carey will continue pushing higher. It's one of those companies that you can invest in here for the long term. You're going to have some volatility along with any other company you're invested in, but generally this company over the long term has a very nice, smooth upwards trajectory. You can see their revenue growth, their earnings growth, just constant, nice and steady. And those are the start of companies that I like to be invested in. Apple. Now, Apple is another one here that we can take a look here over the 1 year period. Apple hit some highs in late 2018 of $233. Now I actually have the other chart here. I can go ahead and pull up the 1 year here, and I can show you that Apple here back in September 2018 was at 228. Here in October 3rd, 2018, it was at $232, basically around 232, 233 before it snagged. They started getting lower, their iPhones weren't selling, and they fell pretty hard, losing almost 30% of their equity there. You can see massive loss there. It shows 40%. I don't actually believe they may have had a 40% cut. I was actually invested in Apple at that time. It didn't feel that bad, but that may have been all my gains there that I had lost and kind of gone into the negative. So possibly I've lost quite a bit more than I had actually considered. But anyways, kind of going back to the point. So here we've had some resistance. What is the next earnings going to look like for Apple? Are they going to guide higher? Are they going to guide lower? Currently, Apple missed their last expectations. This is what kind of caused them. Back on April 30th, 2019, Apple came in. They missed their expectations. They were expecting 237. They did come in at 246. They beat their earnings per share. They had expected 57.6 billion. They came in at 58. So that looked pretty good, but their revenue had actually decreased year over year the same quarter ago, and that is what kind of snagged them. So here we can see here earnings whisper, they were consensus of 237. They beat it. That was a decrease there. It looks like it says negative 0.4, but it actually looks like we had Apple had beat it. Revenue beat it as well, slightly here at 0.7, but revenue growth quarter over quarter just showed that Apple had hit sort of a plateau. They were no longer growing their revenue year over year. Their iPhones weren't selling as much. They had to find some other way of generating that revenue, those earnings, in order to make investors happy. And what can happen here in the upcoming earnings cycle? Well, Apple, with their recent acquisition, I know they just hired in a Tesla automation AI, I believe, some officer from Tesla over there. So I know Apple is doing some AI, some possible automated vehicles and such into the future, but that is much more than just a few months. So Apple right now taking profits on a company such as Apple, where in the short term, they've been at this point just recently back in June. Let's see here. Let's go back to my Apple chart. So here, back on right after earnings. So earnings took place on April 30th. So here, April 30th, they had earnings. Guess what happened right after their earnings? They chugged just slightly higher. Here, they closed. They had their earnings. They popped up about 5%. And what happened? A massive sell-off where Apple sold off from $211 all the way down, back hitting, another dip there, all the way down into 173. Now, there's expectations kind of going on with Apple. Once again, we're hitting this resistance point. Once again, going into earnings cycle. Is Apple going to be pushing it out that they beat revenue? They beat expectations on their earnings per share. They beat expectations on their revenue. They guided higher into the future. They have these new products that are going to be catching the marketer, the consumer's attention, the investor's attention as far as where this company will go here. That's actually going to push either Apple higher or it's going to guide them lower into 2019. Now, I'm not going to be selling out of my whole position at Apple, but at this point, Apple is another position that I am considering taking profits in. Again, I am up roughly $127 in Apple. I won't sell off $127. I'll probably sell off about $50, $75 of profit, just taking that off the table and moving into something else. Now, another company, Kimberly-Clark. Now, Kimberly-Clark, again, has had some resistance here in the short term. It's actually not currently at 52-week highs. I know they recently had a fairly nice day. If we look at the 1 month here, see, maybe not. I thought they did have a pretty nice day just a few days ago. But looking at the 3, well, that's a little bit too long, 3 year. Let's go back 6 months. So here we can see some resistance in Kimberly-Clark. Now this company has came out of getting a lot of hate back. A year ago in 2018, 2019, Kimberly-Clark was down in the dumps. Nobody wanted to own this company. I saw a few investors discussing it where they were offering nearly a 4% starting yield. Not a whole lot of investors are buying into this one. I bought it some time ago, and it has really started to shine after the whole December period. December 26th, President Trump came out saying buy the market. Investors bought the market, and this company, along with many others, chugged higher. Now, we've hit this sort of plateau here in the last few months. Kimberly-Clark has hit some highs here. Let's go ahead and bring up my Kimberly-Clark one here. And we can see here, Kimberly-Clark has hit 137 here. It's hit 137 here. It hit 137 here, 138. And now we're here at 135 and some change. Now, Kimberly-Clark recently came out with earnings on July 23rd. So actually, what is this? On Tuesday, they came out, they beat expectations. They had earnings growth of 1.2%, revenue growth of 0.1%. They grew 5% year over year on their earnings, and they had slight revenue miss quarter over quarter for the past year of negative 0.2. Now, the main thing here is that I believe that they guided on their estimate. So here they were estimating 676, and that is exactly what they guided. They had previously guided 650 to 670. They guided 676, so they actually guided higher. That is why Kimberly-Clark here recently probably took a really good day here. So here they came out, beat expectations, they beat earnings, but look, not a whole lot of movement from this company, even when they beat earnings with really good numbers actually, 1.2 in earnings per share, 0.1 on their revenue, and earnings per growth, 5%. So is this company going to chug higher here? Or is this a good time to be taking profits on this one and kind of rolling over somewhere else? That's something else I'm considering as well. I don't think it's going to go any higher at this point right now in the short term, unless something comes out of the wild and really throws Kimberly Clark a bone. But I think this one could trend back just a little bit. It may trend back into that $128 range. And I'll sort of, when I do sell out of this position, I'll make a note to buy just a little bit more into that $128 point, because I think it will retract back down into here, kind of retest this zone, because it is sort of flying over that 200-day and 50-day moving average. Now, Walmart, another one, same sort of thing here, looking at the 1 year. This company recently hit some all-time highs. Now, Walmart has had a bit of a pullback recently, coming back from, bring up my chart here, 1 month. They hit 114, right in that zone, before kind of pulling back into that 112. We take a look as to why. They had some earnings back in May, June, July. So they may not go earnings here in the short term. They're probably at the very end of the earnings cycle. They'll go and do their earnings, but they actually beat expectations. Walmart's actually a fairly strong company. It's one of the best physical, as far as Target, Kroger's, Walmart, those sort of areas where you can just kind of go to, drive, check out groceries, you can check out clothing. Walmart's one of the strongest ones that I would always recommend of all the companies out there. So I actually don't have any problem right now with Walmart. It has only had 1 point here recently where they hit a little bit of resistance. Now 112, this is fine. They may pull back down. I don't think so. Maybe here in the short term, maybe they will. But if that happens, that's fine. But they have to retest and they have to re-hit this resistance point to see whether they'll retest it or if they'll kind of chug even lower. I'm not actually sure what to do here with Walmart. They haven't shown any resistance as far as lower. They have had enormous gains here as of early June 2019. This company has chugged higher. So let's take a look again at earnings. When did this take place? May 16th. Okay, so that sort of kind of goes with what took place here, I suppose. May. Here they came out with earnings right within here. Earnings beat really nicely. It took a few days for the investors to kind of take a look at their earnings, kind of seeing what they were doing. Are they guiding forward? And then all of a sudden, big rush. Walmart took off up 10% there in a short amount of time. So just kind of interesting. I'm not sure what I'll do with that one. And the last one is Lockheed Martin. Now, taking a look here at Lockheed over the past year, we can see a little bit of volatility here, having some resistance here at this point. You can see here that back about a year ago, it hit this point again, and it wasn't able to cross it. So let's take a look at Lockheed Martin over the 1 year period. We can see here, Lockheed 1 year ago in October, it was at 349, 350, right in this range. 350 was basically some of their highs back in October 2018. So right now we're sitting near some all-time 52-week highs and all-time highs of 368. Now, what has Lockheed Martin got for it? Kind of going forth, they just came out on Tuesday. They beat expectations. They guided higher, I believe. Let's take a look here. Earnings beat 3.1%. Revenue beat 1.9%. Earnings growth 16%. And revenue growth 7.7%. Here we take a look at what the company said as far as guiding into the future. What was their consensus for? So here, the company says it expects 29 earnings of $20.85 to $21.15 per share on revenue of $58 billion. So let's see what their previous guidance was. It was 2005 to 2035. So that means that Lockheed Martin guided higher. That is very stock positive for a company such as Lockheed. So right now, this resistance point that they've recently hit once again, they're hitting a little bit of volatility here in the short term, but because they've guided higher, I think this is really good noise for Lockheed Martin. We'll kind of see how this kind of plays out. We can see here, it just sold off after earnings here on Tuesday. Even with their earnings beat, we can see a huge spike here with earnings beat. Investors taking profits, had opened lower, down 3%, and then started higher. So I think this is normal. I think Lockheed Martin will chug back higher. I think we'll probably see some highs again into the $370 range here in the next few months, into the next year, as Lockheed Martin finishes off 2019 strong. So those are some of the companies I've went through here recently. So Cisco, one I will probably be taking profits from. WP Carey will be one I'll be letting it ride in my portfolio along with ABM Industries. Apple, I will be taking a little bit of profits here as well. Kimberly-Clark, I will have to rewatch my video to see what I said. I think I was going to take a little bit of profits here. Yeah, that's right. I was going to take a little bit of profits here because I'm not sure what sort of products or services that they can have out there to really push this company even higher after they came out. It just kind of beat it, just kind of mediocre here. And see here. Yeah, they actually guidance lowered. They lowered their guidance 665 to 680. They lowered it to 650 to 670. So they lowered their guidance. I don't think Kimberly-Clark is going to hold off at this position. So taking profits on Kimberly-Clark for me is a good idea. Walmart, I'm going to let Walmart ride. I think with their earnings coming up at the very end of the earnings cycle, they'll probably beat expectations again. I know they're doing a whole lot of stuff within their stores, and I think that's very stock positive. And Lockheed Martin, they guided higher. I'm not going to touch that one either. So Kimberly-Clark, Apple, and Cisco are three positions I will probably more than likely be taking some profits on and roll it into some positions that I'm currently down on. So some of those could be from just kind of looking at what positions I'm negative in. I may be adding into positions such as Kellogg's to lower my unit cost, increase my yield on cost, increase my total dividends that I get paid out. I also have Cardinal Health here down 9.25%. So if I sold off maybe $200-300 of these positions where I'm up 30-40% and I move it into Cardinal Health that's down 9.25, that'll offset some of my loss. It'll basically lock in a starting yield of 4.32% in this company. I will be increasing my dividends total paid out because 4.32 probably beats out what these other companies up here are paying me out per share. Apple, Cisco, and Kimberly-Clark. Cardinal Health is offering me a higher starting yield, plus I'll be lowering my unit cost, lowering my total loss that I have taken in Cardinal Health. So that is what I'm going to be basically doing. So I kind of went over my whole process with you guys in one video. Stocks to consider selling, why I'm considering selling them, kind of going over my whole thought process. And I know a lot of investors may or may not like taking profits because they believe they are long-term investors, but sometimes when you're looking at your portfolio, it's not bad to take profits. When you take profits, you're locking it in. You're not selling out of the position. You're not saying, hey, I'm not going to own you anymore. I don't want to own you. You're risky. I'm throwing you out on the street. No, this is just you have seen that your company has made a profit, and I've kind of shown you the whole process of why I don't see in the short term that these companies will proceed higher. I think there will be some noise here where, yes, I'll sell right now in these positions. I'll make a note down in my bottom here where I mark all my buys and sells and where I take profits at. I know I've done it in the past where for a few other companies, but I will make a note. I'll set a reminder of when I took profits, and then I will dive back into these specific companies once they fall down below where my initial sell point is, and then I'll just rebuy back into those positions, basically rebuying my same shares at a lower price with a higher yield on cost of where I sold off. So that is basically all I wanted to cover in today's video. I know it was a very long video, but I really didn't know where I wanted to cover, I wanted to cover obviously what I wanted to sell, but I wanted to go over why I am deciding to sell them and the whole process of kind of coming to the decision of taking profits and moving it into other companies. So that is it for today's video, guys. I hope you guys did enjoy this video. Again, if you did enjoy the video, hit the thumbs up. If you are brand new to the channel, I cover the stock market, dividends, and real estate. If you have not yet subscribed, hit that subscribe. And of course, if you have any comments, questions, would like to drop me a comment, drop it in the comment section below. I do read and apply to all your comments, and thank you all for tuning in. I will see you next time. Have a great day. Bye.